how irritating it is when people tell you it is very easy. Just draw some SNR lines, and you're good to go, right? Have you heard that many times before? If you have tried it before, you will know that drawing these lines are very, very subjective, right? Not all of us, not every one of us will draw the same exact SNR line, right? This will result in all of us having different results, all of us having different entry and exit points. So I know this is frustrating. But fret not, in Module 1 of the course, we teach you how to derive some numbers for you to properly plot the SNR exactly to the T, right to the last decimal place. No guessing, no intuition, okay, none of that nonsense. Now the next thing is when to trade. Remember I was talking about volume. This method hinges around low volume, which means low volatility periods. Okay, this is unique because I have not personally seen a course out there that teaches how to profit from the low volatile times. Everyone else is telling you to trade when there is movement, when there is volume, right? Let us show you how to trade during these low periods. As you can see here, I have marked out in blue, okay, in blue rectangles, Gambit's trading session based on the trade log. Alright, so I've plotted all his trading sessions on this MT4 based on the time he entered all his trades, okay, and we can see it represented here. So remember I was talking about volume. What you can do here, this is my volume indicator. This is the only indicator, which is the very basic one. It's just to tell you when is worthy enough for you to check the markets out. So to do this, you go to your toolbar here and you go to volume, okay, under indicators, okay, go down to volume, open up volume, and just choose volume and drag it here, okay, and you can choose all these parameters. You can make it big, fat, thin, whatever. Alright, so basically high means high, low means low volume, right? It's quite self-explanatory. Okay, so as you can see here, this is when the Gambit 619 traded during this time here on the 25th of April 2016. You can see that from here to here the volume is low, okay, compared to here, right? This is a low period, okay. I've plotted everything based on this time, okay. That's why I asked him to leave out the hour here, so you can see that I've plotted correctly, that I'm not making this up, okay. It reflects here accordingly. So let's look through a few. Okay, here's another one. Okay, look, very low. Okay, relatively low. Can you see his trading? His trading sessions are between the volume peaks. Alright, here's a peak, here's a peak, here's a peak, and he's trading in between the high volume. How cool is that? Alright, everyone's telling you trade here, there's high volume, but we are teaching you how to monetize on the low trading periods when it's quiet. Yeah. Another good thing about trading low volatility periods, they respect SNR lines a lot because there's not enough volume, there's not enough momentum to push through and break the SNR line. That's another key point, another giveaway. Alright, so here another low. Okay, this part I remember. This session is two mini sessions broken into half. Okay, it's between here and here. Okay, this spike in volume somewhat destroyed, parted the two trading sessions. Okay, here another low volume, low volume, low volume. Okay, just scroll through and you can see that it's in between high volumes. It's in the low volumes, the low valleys of volumes. Okay, here he didn't trade. Okay, low volume, low volume. Alright, you get a picture. Okay, lastly, how long should the trade last? Alright, this one will be covered in the course. Alright, I'll leave it to the course. That's why I got Gambit to censor the expiry time and the order time. But I asked him to leave out the to at least show the hour here, so you know exactly when he's trading. So just now I get to show you all this, so you know that I'm not making this up. The only thing I can give away is that we are looking to trade within that window, the few hours, okay, of low volatility. So it's not like you're holding it through the day. Okay, none of our options, none of our contracts last the whole day or more than a few hours. Okay, that's about it. Oh yes, a few more things. Yes, you can see under the instrument, okay, we are only looking to trade the high-low type of options or contracts. Okay, there are many types of contracts. In the course, we will only be trading high-low, but you can trade any of the assets available within the broker that you're using. In this case, he's just trading with Euro USD. The other thing to take note is the expiry type. Alright, I do not believe in premature closing or selling back to the broker your option, closing out early. I do not do that. I'm not a big fan of it, as will be explained in the course. Okay, and the other thing you will notice is that the returns, okay, are different. Okay, you'll be wondering, it's the same instrument, it's the same asset, why is the returns different? Okay, well, the returns do change from time to time. Alright, based on time and based on the asset that you're trading. That means at this particular time, the Euro USD may be giving you a return of 70%, but the Aussie dollar may not give you 70%. But normally the Euro USD will give you higher because there are more people trading it, so you will get around 85 to 80% return on investment return. Okay, and depending on the time you're trading, the time of day, the percentages do change. Right? Anything below 70%, you can give it a miss. Okay guys, so I hope this is inspiring, encouraging, and motivating or motivational. Okay, so to your success, and I wish you all the best. Take care.